Are you tired of waiting months just to see a small dividend hit your account? What if you could get paid every single month just like a paycheck without clocking into a job? Monthly dividend stocks are shares of companies that give cash to owners every month instead of every 3 months or once a year. This creates a steady flow of cash which investors wanting passive income often like. Dividends are usually payments made by well-known companies from their profits. On the other hand, monthly dividend stocks give you money every month, and the payments are usually big, sometimes more than twice the yield of a 10-year treasury. Of course, there is a chance with a higher yield. A lot of high-yield payers have payout rates that are close to or above 100%, which means they give away almost all or more than of their earnings. A company might have to borrow money or cut its income over time if it has to pay out more than 100%. This means that a very high return today might not be a sure thing in the future. This is why experts stress diversity. For instance, to get $1,000 a month in dividends at a 4% yield, you would need to put about $300,000 in 20 to 30 stocks in different industries. Spread out your investments so that your income stream is safe even if one stock goes down in value. Here are profiles of 3 well-known stocks that pay out every month: Realty Income, Stag Industrial, and Main Street Capital. We look at the past, financial health, growth outlook, dividend yield and schedule, and business of each company. Then a comparison table shows the most important data. Lastly, we talk about how to use these shares as part of a diversified monthly income plan that includes risk management and reinvestment to make the money grow. Realty Income O called itself the monthly dividend company. Realty Income is a big triple net lease REIT that invests in commercial real estate, mostly stores, but also factories and offices. It has been around since 1969 and now owns more than 15,600 properties in all 50 US states, the UK, and several European countries. Many different types of people rent these buildings from the company on long-term net leases, which mean that the renters pay for taxes and upkeep. As of the middle of 2025, it had paid out 659 monthly payments in a row, a record that spanned more than 55 years. It has raised its payout 129 times since it went public on the NYSE in 1994. It is now one of the S&P 500 dividend aristocrats. Yield and schedule of dividends. Realty Income pays about $0.2685 per share every month in 2025, which is about $3.22 per year. This is a yield of about 5.7%. Every month, dividends are paid out in the middle of the month, with record dates early in the month. Historical performance. Since its IPO, Realty Income has raised its dividend 110 times in a row, or every 3 months. In the last 5 years alone, it has raised its dividends 23 times, giving it a 4.3% compound annual growth rate. The rental rate is still high. In Q4 2024, it was 98.7%, and it's expected to stay above 98% in 2025. Some tenants like shops and convenience stores don't really mind when the economy is bad. Financial health. About 73 to 74% of funds from operations, FFO, are paid out, which leaves a good growth buffer. The business has a modest balance sheet with over $2 billion in cash on hand and a debt-to-EBITDA ratio close to 5.5. Some types of floating rate debt can also protect you from changes in interest rates. Growth opportunities and risks. Realty Income bought almost $4 billion worth of new homes in 2024 and expects the same to happen in 2025. It's going into new areas, like data centers in Europe. Even though changes in interest rates can be bad for REITs, the company's good occupancy and strong tenants help lower this risk. Stag Industrial, Stag, is an industrial real estate investment trust that has an e-commerce site. Pay attention. Stag Industrial focuses on industrial properties with only one tenant, like warehouses and distribution hubs. It has leases with more than 100 different companies in about 50 US markets, and many of them help the growth of shipping and e-commerce. By 2030, e-commerce is expected to become much more popular, which should make more people want Stag's assets. Dividend yield and schedule. Stag pays about $0.297 per share every 3 months, with monthly payments adding up to about $1.188 per year. This gives us a return of about 4%. For the past 7 years, the company has raised its income every year. History. In the fourth quarter of 2024, Stag recorded net income of $0.28 per share, up from $0.23 per share the previous year, and FFO per share growth of about 5%. Same-store NOI went up about 4.4% thanks to good rent collections and price increases. Health of the company's finances. Stag's payment ratio is about 60% of FFO, which provides a high level of safety. About 2/3 of its income comes from investment-grade renters, and it has a moderate amount of debt. Potential for growth and risks. Growth is coming from purchases and more people wanting to rent logistics sites. It is thought that the potential market is worth more than $1 trillion. Risks include economic downturns and renter turnover, but Stag's wide range of properties helps to lower these. Even though cap rates have gone down, the company is still being picky about which companies it buys. If you're serious about building passive income and want monthly stock ideas like these delivered straight to you, don't forget to hit that subscribe button and turn on the bell. Your future self will thank you.